What if I told you a stock has surged more than 5,000% in just 1 year? That's exactly what happened with Sndk, one of the hottest stocks in the market right now. But here's the big question. Why did it rise so much? Can the rally continue, or is a massive crash coming next? Let's break it all down. The biggest reason is simple: artificial intelligence. As AI adoption explodes, companies need massive amounts of data storage. Every AI model, data center, and cloud platform relies on high-performance storage systems. Sndk is a major player in NAND flash memory and SSD storage. As demand for AI infrastructure surged, demand for storage surged too. At the same time, NAND memory prices increased significantly due to tight supply and strong demand. Higher prices meant higher profits. Another major catalyst was Sndk becoming a pure-play storage company after separating from Western Digital. Investors suddenly began viewing the company as an AI infrastructure stock rather than just a traditional storage company. Strong earnings, improving margins, and growing AI demand created the perfect storm. As more investors rushed in, momentum accelerated and the stock entered a historic rally. Can the extreme rally last? The bull case says yes. AI spending remains incredibly strong. Data centers are still expanding. Cloud companies continue investing billions in AI infrastructure. If NAND prices stay high and AI demand continues growing, Sndk could still deliver strong earnings growth. However, there is another side to the story. Stocks don't go up forever. After a 5,000% move, expectations become extremely high. Any slowdown in growth could trigger heavy selling. The memory industry is also highly cyclical. If supply increases too much, NAND prices can fall rapidly. That would put pressure on profits and potentially end the rally. So while the long-term AI story remains attractive, investors should understand that the risk level is much higher today than it was a year ago. How much could Sndk fall? This is the question everyone wants answered. Historically, stocks that experience parabolic rallies often go through major corrections. A healthy pullback could be around 20% to 30%. A stronger correction could reach 40% to 50%. And if the memory cycle turns negative, declines of 60% to 80% are possible. That sounds scary, but it's important to remember that large corrections are common after explosive rallies. Even Nvidia experienced multiple 50% plus declines before reaching new highs. So a major correction wouldn't necessarily mean the AI story is over. It would simply mean the market is resetting expectations. Sndk's incredible rally has been driven by AI demand rising, NAND prices, strong earnings, and investor enthusiasm. The company could continue benefiting from the AI boom. But after a 5,000% gain, the stock carries significant risk. For existing shareholders, protecting profits may be important. For new investors, patience and waiting for better entry points could be the smarter approach. The AI opportunity is real. The question is whether the current stock price already reflects too much optimism. What do you think? Will Sndk continue higher and become the next AI superstar? Or is a massive correction coming? Let me know in the comments, and don't forget to like, subscribe, and turn on notifications for more stock market analysis videos.